The first silver squeeze, I was still at Sprott. And the Sprott Physical Silver Trust was adding assets like crazy. We had to go buy silver. We had some hairy moments, not because of the market, but because our own buying was so heavy. But there was never a squeeze in wholesale silver product. The circumstance that we have today is, in terms of good delivery retail product, 1 ounce product, even up to 1 kilo product, it's short.
Yeah.
There is no shortage of institutional product. There's no shortage of good delivery for people like the Sprott Physical Trust. There is a shortage of good delivery on deposit at COMEX. If we can get through the next 3 or 4 months, that solves itself.
Yeah.
The dealers are reluctantly buying back non-good delivery silver, shipping it to the refineries, and it reappears as good delivery. In the interim, the circumstance that we have is that the outstanding paper contracts greatly outweigh the amount of silver available for good delivery. Now, the silver squeeze people need to understand the way the exchanges work. The exchanges are owned by the members. The idea that you will ever actually catch them physically short so that they get bought in for cash will never occur. The exchange will declare force majeure. They'll cash settle. They'll halt the contract. They'll cash settle, wipe their hands and go away. The idea that you're going to catch JP Morgan Chase or Conti or any of these guys physically short is nil. It's a non-starter. It will never happen. If you look back to the tin trade, the nickel trade, when the dealers get too far offside, what it's going to cost them on their balance sheet? Force majeure, suspend the contract, cash settle, drive on.
So we're going to see a couple more halts here, technical glitches, I'm sorry?
That's insane. Yes, probably.
According to Rick Rule, silver quadrupled when hate dissipated. He sold, redeployed 50% into silver stocks, priced at $45 silver, while spot was $75, meaning upside remained even if price stayed flat. He warns the silver squeeze will never work. Exchanges will declare force majeure, cash settle, and walk away. JP Morgan will never be caught physically short.
I bought silver some years ago because it was hated. And I believed that when the hate dissipated that the silver price could double. I was wrong. It quadrupled. But I'm an old guy and I'm a disciplined speculator. When a position performs the way I had hoped, I sell it. I looked at my silver position and said, as a speculation, it's run its course. So benchmark it against some other speculations and see if it stays in the portfolio. What I discovered was that the silver stocks themselves were being valued by Bay Street at about $45 silver. Therefore, if the silver price held constant at 75, by definition, I wouldn't make any more money on silver, but I could still make money in the silver stocks. Conversely, if the price fell, because of the implicit discount in the silver stocks, while their prices might fall, their values wouldn't. So about 50% of the money I made by selling silver, I put into the silver stocks. But remember, for me, it was a speculative position. What really happened is that silver ceased to be hated. I got the price appreciation I wanted. Sold it, moved on. I think Eric's probably right. 2 years ago, I would have disagreed. I still remember the inefficient capital allocations by the seniors in the period 2000 to 2010. That was a period where the gold price was up sixfold and the free cash flow per share of the senior indexes fell. That took real courage. I think now probably the investment community has asked the senior managers to be too cautious with money, and they're going to come into a period 2 years from now where they are asked to at least grow or maintain production. The people like Agnico Eagle that are ahead of the pack will continue ahead of the pack, and the people who aren't will, as Eric points out, be scrambling to catch up. And part of that's our fault. When I say our fault, I mean the investors. We asked the mining companies in that bad decade to grow at all costs. They did, and the cost turned out to be too high. We've probably asked them to be too cautious. I've watched India for a long time. They don't have anything like permanent policy. I remember some years ago when the Indian government put a big excise tax on gold. I had some friends who were Gujaratis, and they were Well, I would call them traders. The Indian government would call them smugglers. And I asked them about that circumstance, and they said, well, we hope the excise tax continues. And I said, well, why is that? They said, well, it costs us 2.5% in bribes to land the gold in India, and there's a 15% excise tax. And they built us in 12.5% margin. These are exciting times. And, my suspicion is, we've talked about this before, given the likelihood of the deterioration in purchasing power for the US dollar, and by the way, the Canadian dollar for 10 years, I think if you look over the next decade, the gold price, at least the nominal gold price, will do well. I don't think that the pace of increase will rival the pace that we enjoyed in 2025. So the listeners that you have who believe that the gold price will double in the next 12 months will be needlessly disappointed. Let's say it went up 10% or 15%.
Yeah.
Let's say, too, just for fun, believing like Eric Sprott, that the gold and silver companies discount fairly substantially the current price of gold and silver. If gold and silver just went sideways, the stocks need to go up to catch up. So there's lots of room left in this market, assuming that your listeners don't have overinflated expectation. I think that's the important thing. I think don't lose your head about where we are. There's great advantage coming. If you keep your head and you play the game just with the facts at hand, as opposed to exaggerating that in your own mind, you're going to do very, very, very well. The people who want to make large amounts of money but take risk, the game is an exploration. Anybody who's lucky enough to make a real discovery is going to be surprised at the takeout price. Witness Great Bear. If you make a real discovery, even in a bad market, you're going to make money. But in this market, you're going to make a lot of money. If people don't have the appetite for that kind of risk, the single asset producers are viewed as riskier than the multi-asset producers. You eliminate the discount with a takeover. You eliminate it right now. Single asset producer becomes a multi-asset producer. That's probably the low-hanging fruit out there. You won't make as much money there as you will in exploration, but you'll make it quicker and you'll make it in more certain fashion. I think the valuation disparities that you're seeing in the royalty and streaming space between the great big ones and the little ones probably disappears. If it doesn't disappear in the market because of arbitrageurs like me, it disappears because the big guys take over the little guys, and that's how it goes away. M&A is going to be a big, big theme in the next 5 years. People say it's heated up, but it has nowhere near run its course.
Is the market now pricing out rate cuts because of this insurgence of inflation?
Yes, which is, I think, an enormous mistake. First of all, I think the conventional measures of inflation are lies. If your listeners will do the simple thought experiment and look at the basket of goods and services that they consume and take it back to 2020 and ask themselves whether housing prices or rents in Canada have been increasing at 2.5% compounded or some higher number, or their gasoline, or their tax bills, or their groceries. The idea that inflation is correctly measured by the CPI, which is to say 2.5, 2.6%, causes good commentators to call it the CP lie.
Yeah.
My suspicion is that the deterioration in the purchasing power of our currency, which is what I characterize as inflation, I think that number is closer to 8 or 10. I think it's a much bigger number than people give it credit for being. And I would challenge your viewers to put themselves to the test. Look at the basket of goods and services that they acquire, and look at what those price levels were in 2020, and look at what the price levels are today, and ask themselves whether the number that you're being quoted by your government is accurate or fallacious.
I mean, the government doesn't want people to know that. Of course not. They've been actively trying to kind of juice this up. I mean, what does that look like? We got the midterms coming up. We got Kevin Warsh. I mean, there's a lot of things coming to fruition this year, not to mention war.
Sadly, I think most people don't want to confront bad news. If they do, they'd be forced to act on it. And most people would prefer that their problems were solved by others. And people still, unfortunately, on both sides of the 49th, believe that the government is the right place to solve the problems. I think the government causes the problems. I would prefer that your listeners, rather than wait for Carney or Trump to solve their problems, think about solving them themselves. But they need to confront them first. If you believe that inflation is at 2.5 and you get paid 4.2 or 4.3 on a U.S. 10-year Treasury, you're fairly sanguine. If rather than that, you think that you're getting paid 4.2 in a currency that's depreciating at 8% compounded, you think, uh-oh, I have to do something about this. Sadly, too many people don't want to take control of their financial future. Money ultimately is made in the delta between the price you pay and the value you receive. Yeah. The value might be anticipatory. In other words, it might be that the value isn't present now, but you can see over 3 years or 5 years how the management team could add a lot of value. The delta between the price and value is where money's made. The second thing among the juniors is human capital. Right. It's all about the jockey. Yeah. And the jockey needn't merely be a success. The jockey needs to be a success at the task at hand. If the jockey was a success operating a gold mine in French-speaking Quebec, and the task at hand is exploring as opposed to operating in tertiary volcanics for copper gold deposits in Spanish-speaking Chile, the success isn't necessarily appropriate to the task at hand. So it's important that the speculator understand that the management team has to be successful, but that success has to be appropriate. Yeah. The third thing is that the management team has to have a plan to add value that you understand. I ask every exhibitor here that I talk to, and there'll be about 100 this year, tell me the most important unanswered question in front of you. Not what your ultimate goal is, but tell me the interim step that increases the market's understanding of the value of your project. 80% of the time I ask that question, the management team can't answer it, which is to say they don't have a plan. Now think about that. How are you going to get somewhere without a plan?
That's an interesting one. How many people have you asked? I mean, you said you're talking to 100.
I've been doing this for 40 years.
Yeah, so a lot of...
Literally 80% of the time I ask the question, the management team says, well, we've never thought of it that way. What that means is that to them, the most important unanswered question is, will I draw a paycheck in 2027? I don't mean to be harsh, but I don't care. Yeah, right?
Yeah. I just want to know your take on uranium and obviously copper, because we're hearing a lot of M&A discussion this morning on that copper deal.
Yep. Both of them over the 5 or 10 year time frame are inevitabilities. The uranium market in particular, because the structure of the market is going from spot to contract, there are profound differences. We can talk about that in a subsequent interview. That's a 10 or 15 minute discussion. It's profound. It's really, really, really important. But people need to know that. They need to see that the term market, which is opaque, is $8 ahead of the spot market. People are willing to pay a premium to have security of supply over time, which is important. People need to understand that.
It's a big value.
Big, big, big value. Now, remember, there's probably 150 so-called uranium companies in the world. There are probably 11 that are worth a bid, so you got to throw the rest of the way. Yeah. The copper space, similarly, I was at Metals Week in London, and I heard a really stunning statistic, which is that the biggest copper producers in the world need to invest $250 billion constant 2025 dollars to maintain current production. Now, current production is at a deficit, and demand is growing at 2% compounded. And the input in terms of front-end capital costs are escalating at about 8% compounded. So what is today a $10 billion build, next year will be an $11 billion build. The year after that will be a 12.5 build. You follow what I'm saying?
Yeah.
A lot of money needs to be spent in the copper business to maintain the current levels of production, which are by themselves insufficient for 10 years from now. Now, there's going to be a lot of copper pretenders. There's going to be a lot of amalgamations of butchers and bakers and candlestick makers. And their slide deck is going to be all about the copper rather than the fact that their company doesn't have any copper. Right. So
maybe that's why Friedland's so excited right now.
There's nobody like Robert.
Yeah.
There's nobody like Robert.
Yeah, he's been planning for this for a moment, I think.
Robert, I mean, first of all, I joke that whatever Robert happens to have, the world is desperately short of. Yeah. But part of that is because he's been spending $10 or $12 million a month on exploration for many, many, many years. He's got a lot of zinc. If we had a zinc market, he could say, I have the world's highest grade zinc deposit in my portfolio, Kapushi. That would be true. That would be true.
Just
platinum and palladium, biggest new platinum mine in the world. Robert has been a copper bull for a very long time because he's an optimistic human being about the world, and he understands that copper is essential for that. Very few people can combine his mastery of the big picture with his ability to hire and fund discovery. In fact, nobody that I can think of has that track record.